Hey everyone, Sam Seiden here. Good to see everybody. Hey Frank, how you doing? Let's connect again soon. Great to see everyone. Let's get started here. Lots to go over, never enough time to go over it. So what I thought we would do today is actually, we've spent a lot of our time in these sessions just going over trading opportunities and taking them. And then recently we did some, I think, one or two education kind of focused sessions. So I thought today we would do both, a little bit of both actually, or a lot of both. So let's dive in and do that. And um, when we get to the markets, I certainly have today I have a very big list, so I can certainly go through that list. We probably wouldn't even get to half of the list, but of markets and opportunities for us. But if you have markets you want to look at when we actually get to that, just let me know. I'm happy to do that. Yeah, great to be with you. And if you have any questions, you can always email me. Just let me know you're from FX Street, and that way I'll have some context around it. And here's my email address, just so you have it. Because I know sometimes you go fast and all that other stuff. sam.seiden@tradingacademy.com. All right. So let me share something with you here. I actually just got out of a trade, so I thought let me talk about that in just a minute. So I assume you can see the screen here. So I want to make sure we're all on the same page with this. Let's go through this for about, I don't know, 5 minutes, and then we'll get on to the charts and markets and all that stuff. And you can see the screen okay? Economic news and price, a perfect relationship. So what we're talking about here is any possible influence on price, earnings reports, some kind of government report, interest rates in Australia, housing starts in Canada, jobs numbers in US, it doesn't matter. Anything, money supply, you name it. And if all of us in our group here today built this list, we could keep adding to it all day. There's so many different possible influences on price. But what you need to understand to move from being a novice trader and investor to a professional trader and investor is that any and all influences on price are reflected in price. Now, what do I mean by that? What I mean is all of these different, reports and numbers and news and all this stuff, what it actually does is create different thoughts and perceptions for all of us, right? Everybody around the world has a slightly different thought or perception around any given report or combination of news. I think we all agree on that, right? At the end of the day, and it's important that all of your thinking and rules and logic and all that around trading is objective. You don't want to include anything subjective into your decision-making process. That's why we focus on pure supply and demand, buy orders, sell orders, all that. So these thoughts and perceptions, based on all this information and news, turn into one of two things. Well, one of three things: a buy, a sell, or nothing. Now, we don't care about the nothing. What we do care about is the buy or the sell, because the buy or the sell ends up on our charts, right? That's what makes up charts. That's how you get candles and bars and lines and everything on charts. When a trade happens, that's on the chart. And the trade happens because someone had such a strong thought or perception that they were willing to risk money in the market. That's what we care about. And we care about quantifying that supply and demand that actually makes it into the market. But more importantly, the supply or demand that doesn't make it into the market. Those price points where supply and demand is so out of balance that you don't even get any trading or very little trading. Okay, because at the end of the day, we're trying to answer two questions: where are prices going to turn, and where are they going to move to? And we know how to answer those questions, right? Unfilled orders, or supply and demand, cause prices to turn. Filled orders facilitate price movement. Okay, so our only goal is to figure out or learn what those two pictures look like on a price chart, and that's what we go over here in these sessions, right? Um, this is very important also. I don't think I've ever shown you this. Okay. So when I say economic news and price, a perfect relationship, what do I mean by that? I mean that it's never wrong, right? The actual news or report or data or number and where price in that market, it's never like a mistake. It's never wrong. It's always exactly where it should be. Does that make sense? The problem is most people think it wrong, which means most people treat it wrong, especially Forex traders, which is why I wanted to bring it up here more than almost anywhere else. So if you look at the middle of the screen, is everybody understanding and making sense? I know the chat's a little quiet, but it means you're either really focused or falling asleep. No, I'm just kidding. So take a look at the chart. We have three areas on the chart. Up on the top, supply is increasing. We have strong supply, right? Meaning just a lot of willing sellers, a lot of supply, a lot of competition to sell. Down at the bottom, increasing demand, competition to buy. The further up you go and the further down you go on this graph, your supply and the more out of balance supply and demand is. And that means low risk, high reward, and high probability opportunity for us. Okay. In the middle, supply and demand is in relative balance. I don't put equal or equilibrium. I don't like that word because it's not true. There's never like exact equilibrium. Okay? It's always an unbalanced equation that takes a certain period of time to play out. Make sense? But when you think about trading low risk, high reward, and high probability, it comes down to where those imbalances and where the profit zones. Okay? So we don't want to trade in the middle. We want to stay away from this, and we only want to take action when prices are out here on the sell side and over here on the buy side. But here's where everybody gets it wrong. Now on the left, we need to start at the top. Bad news or some bad report, and the worse and more pronounced that news or report is, more people want to tell. So supply is coming into the market. All that supply causes prices to decline because when there's supply coming into the market, all the sell orders or all that supply is looking for are buy orders to be matched up against. So that's why prices fall, because at current prices, when that news comes out, there's not enough demand to fill all the supply. So price falls. It continues to fall, and if the news is really strong, meaning a lot of supply is coming into the market, it falls and falls and falls because it needs buy orders to fill it, and those buy orders are lower. Eventually, the last news-driven seller sells, and prices at a level where demand exceeds supply. That's a market bottom. Just the opposite. Good news comes out. Really good news creates demand. Demand drives prices higher because you need sell orders to fill that demand. Eventually, the last news-driven buyer buys at a price level where supply exceeds demand. Price is going to fall. That's a market top. Right? So now let me show you a trade that, so I deliver 30 to 45 minute trading sessions every morning early. I've already done it today for a group. So I want to show you a trade that I took. What's this one actually right here? I can show you. So this is all, here's the supply zone. Here's what the supply zone looked like. This is in the S&P actually. We'll go over Forex markets in a minute. So this is in the S&P, and this order was put in very, very late last night. So notice the supply zone here. Okay. Price is trading sideways. Strong drop in price from this level. And by the way, this is all, anytime I show you, when I say I took this trade, it's all a real account. These aren't hypothetical returns or demo accounts or anything like that. Okay. So, strong drop in price from this level suggests a big supply demand imbalance at the level. Okay. We've got our pattern. We've got a few odds enhancers telling us that supply greatly exceeds demand here. Now, if that statement was not true, and supply and demand was in relative balance or equal here, wouldn't price just keep trading sideways? It would, but it couldn't. Why? Supply exceeds demand. Okay. How out of balance is supply and demand up here? How many unfilled sell orders are there? A lot. Based on the evidence we have with this level, there's a lot of supply up here. And this was at 27.97. Okay. This supply level was found 2 days ago, and I gave it to the group yesterday, and then we went over it again today. This is so. Notice price attempted to come up to this level here, but couldn't. Why? Huge supply-demand imbalance here. Anyway, very in the wee hours of this morning, price did rally all the way up to this level. That's that. So we're able to sell short here with a profit target of 27.71, and which paid us close to $1,300 per contract. So that's just if you did one contract. Now, remember, there's two parts to this, right? Where a price is going to turn and where are they going to go? That's the only question that matters. And we can apply this rule-based strategy for daily or weekly income and building and protecting that longer-term wealth. Okay? And we'll go to live charts right after this. So remember, so our supply zone here, lots of unfilled sell orders. So we expected price to turn as it did here. Now the second question, once it turns, where will it go? Well, this area in here that I'm circling, does this picture represent filled orders or unfilled orders? You tell me. What does this price action tell us that's in this area? Lots of unfilled orders like we had here, or filled orders? What's the answer? Filled orders, exactly. Okay. All this, look at all of the trading in here. Look at all the wide and whippy trading in here. There's no problem buying and selling as much as you want in here. Make sense? Another way to say it, and what we care about in here is demand, because we're very confident the price is going to stop rallying here at this supply zone and turn lower. Okay, because there's lots of unfilled sell orders up here, supply. But the second question, where will it go? That depends on the demand side of the equation. And what this picture tells us here is there's no significant demand until much lower. There's little pockets of demand in here, but we don't care about that. I want to know, are there any big banks or financial institutions, any big pockets of smart money buying down here? And the answer was no. Again, how do we know that? Because this picture represents filled orders. Another way to say it, if demand did greatly exceed supply anywhere in here, down here, would the picture look like this? No, not at all. It would look like that. You'd see very little trading here. Price would cruise away and not come back. But you didn't. You got the opposite. Filled orders cause prices to turn. I'm sorry. Unfilled orders cause prices to turn. Filled orders facilitate price movement. Okay. It all depends on your account size, Michael. So this one was fairly low risk. We're going to look at it in a minute. We'll actually look at it in just a minute. I just have one more thing to go over here with this trade, and then we'll actually go to this trade in the live charts, okay? And I'll go over that. So if you're new to this, there's one more element I would suggest that you bring into it. And it's something that most people don't focus on. It's understanding who is on the other side of your trade. If you're buying, who are you selling? Who are you buying from? If you're selling, in this case, which is what I did, who am I selling to? I want to know, I want to have a good idea, am I selling to someone who is consistently profitable, or am I selling to a novice buyer? Now, how do I know the difference? I don't know exactly who the buyer was on the other side of my trade, but I know a lot about them. And the two things that are most important are, was the buyer making the two mistakes that novice traders make? Mistake number one, was the buyer here buying after a rally in price? Yes. Why is that important? Because think of how you make money buying and selling anything in life. Can you consistently profit by buying after a big move up in price all the time? If that's a rule in your strategy, are you going to do well? Meaning you can't buy until price goes up significantly. Probably not a good idea, right? Probably not a good idea. So, but that's only one clue. That's only one mistake. The second mistake is, are they buying at a price level where the chart already told us supply exceeds demand? The answer here again was yes. So they're buying after a big rally in price into a price level where the chart already told us the smart money, banks, financial institutions are selling. Can you understand kind of how the strategy works now? Okay. All right. And then of course price falls easily because there's nothing to stop it. All of this is well known well before we take the trade. Now let's go to the live markets and take a look. So here's that trade. Here's how it looks on the, there it is. Okay. Now that supply zone was way back here. So to specifically deal with your question there on risk reward. So the entry was at 27.97 and the stop, I'm just looking here. Just want to make sure I get this exactly right. The stop I believe was at 80, I believe it was 83.50 or 85, I'm not sure. Might have been 85. Okay, so that would be, if it was at 85, it might be at 83.50. I'm sorry, 28.03.50, but let's just say it was at 28.05. Okay, that would be 8 points of risk. Okay, 8 points of risk, and the target was right here at 71. Okay, so let me just get this for you. So that would be 20, yeah, right, 26 points of profit, and so that's a little more than 3-1. Does that make sense? You could certainly go for more. There was just some demand a little bit below that. All right. So in the larger time frame, here's the 60-minute chart of the S&P. Wanted to take a profit before it got to here. You know, am I crazy about a 3-1 opportunity? No, but it was there, and it was very predictable and high probability. So if I'm offered 3-1 and it's high probability, happy to take it. Okay. Obviously looking for more. This demand zone is not fresh, Mike, but the supply zone was, and that's much more important. Does that make sense? So make sure you understand, not that one, that one. So there's that 97. So that supply zone was fresh because that's where my risk was, up here. Okay. I think you meant, Brian, I think you meant to say barely touch the supply zone there. Would you take it again? I would take it like a tick into that level. Oh, let me just a caveat there. In the equity index markets, most of the time I will not take a second pullback when you're shorting. Buying, yes, not shorting. But this is only a rule for the equity index markets. Why is that? Because the equity index markets, right, the stock markets, they're designed to go up over time. So those are the only markets that are kind of set up that way. You can't say that about the FX markets or commodity markets or, you know, treasury markets or any of those. Right. So I tend to be, you know, in my mind, you definitely want a bullish bias in the stock market most of the time. You obviously want to know when you're hitting those larger time frame supply zones, but for the most part, yeah. Okay. Why not hold below this demand zone here? The short. The reason why I wouldn't want to do that is because it could certainly go lower, right? So this is not a fresh level. We've been there once, but remember it's an equity index market, and price didn't go too deep. Price didn't go too deep into the demand zone. So you're likely to get another little bounce from this area. And again, it's an equity index market. So I'm definitely not, I'm never getting, I rarely get married to short positions in the equity index markets. 2735-ish. Let me find the 35. Oh, this? That level right there, Michael, that's not a demand zone. So that's just a pivot low. That's probably one of the top two mistakes that people make is they take pivot lows and highs as supply and demand zones, and they're definitely not. Okay. Remember, a pivot high, that's like saying that this right up here now is a supply zone. It's not. It's a pivot high. So most of the time, price will go right through those levels. I wouldn't even call them levels because they're not levels, those areas. And that's because those pivot highs and pivot lows are pullbacks into areas. In other words, the pivot highs and pivot lows fill the orders that a lot of people are thinking are actually, buy and sell orders. They're not. They're not there anymore. So, sorry about that. There we go. Okay, let's keep going. So again, I have a lot of markets to look at. If we want to go to the FX markets, we could certainly do that. And why don't we start with the dollar? Okay. One more to look at though. Here's another one that I don't know if is anybody with us here in our morning in the morning sessions that I do. Here's another trade that I'm not in this one, but a lot of people from the group are. It's just a short position in gold. Again, just applying the same rule-based strategy. Just want to show you again another very different market, just applying the same rules. But do you see how whatever market we're looking at, does it matter? Like we just went from the S&P to gold, both applying the same strategy, same everything. Okay. Jared, no, I'm just saying, I'm always saying play the profit zone that's available to you. In this case, the easier money profit zone was offering a little bit more than 3-1. It was offering about 4-1. So therefore, I'm going to take profit around 3-1. Okay. But if the profit zone was 20-1, I would try to hold it for maybe 17-1 or something like that. The other point I just wanted to make real quick is for people that are new to the supply-demand strategy is, whatever market we're looking at. So we were just looking at the S&P and now we're looking at gold. But you can see we're just applying the same strategy, same rules, same everything. But does it matter what the market is? In fact, what if I hid the symbol and told you that this was the S&P and the other one we just went over was gold? Would that even matter? I mean, obviously the numbers matter, but you see my point? Because what are we focused on? We're not focused on, whoops, right? We're focused on, this, okay? I don't care about any of this stuff over here on the left. I don't care what market it is. Yes, you need to know the price points. The price points are different. You need to be clear on your risk and reward and okay with it. But at the end of the day, all I'm focused on is supply and demand, period. Nothing else. All right? There's no market in history that has ever trumped supply and demand. Maybe that's not the right word to use, but you get what I mean. Okay? There's no event in history that has ever gone outside the boundaries of pure supply and demand. It's just not possible. So be careful making things too complicated and getting too crazy about all that stuff. Let's look at the dollar and let's get on with some Forex markets. Okay. Yes, Linda, I see your comment there, so I want to read your comment. I just looked back in the chat. I don't always have time to look back in the chat, but you're saying Sam, I still struggle with zones which are situated in the kind of support and resistance levels. Sometimes they work, but mostly not. Could you explain the view, please? Yes. The reason why you never hear me talk about anything conventional technical analysis, especially those terms support and resistance, is because the whole concept is incredibly flawed. That's why you don't see people making a low risk living year after year after year using that stuff. So, and I don't just want you to, don't just take my word for it. Let me explain. And you help me explain. How about that? For support and resistance, how do you come up with those conventional support and resistance lines? And what I'm saying is support and resistance is very different from the supply demand that we're talking about here. So tell me the rule, right? I know the rule. I just want you to help me with it. But when you're drawing a support or resistance line, what do you need? Like what has to be present? Tell me the rule that has to be present to draw up a supply or demand line or zone or what have you. What do you need? Well, okay, maybe, but yeah, but what do you need? Right, but what do you need to draw those lines? Those that it's in every trading book. It's on the internet, millions and millions of times over, right? And like a support line or what have you. You need a number of what points to draw that support line. How many points do you need? Like how many? Yeah, multiple touches. I don't know how many touches. How many points? Like for example, oh, I don't know. I'm looking for something on a chart here to draw some lines. Maybe this one's a better one. All right, 3 for a trend line. Yep. 2 to notice, 3 to confirm. Right, all that stuff. Yeah. It's in every trading book that's ever been written, right? So here's the problem. What nobody's thinking about is those 2 or 3 times price hits a level. So let's say it's support. Let's say you're following the support and resistance rules. It's like in the Bible of, technical analysis. And you've got three lines, three, I don't know, pivot lows. And now you got your 3 points. So now you can draw your support line, right? Now answer this next question. The next time price comes back to that line, what are you supposed to do? What's the rule right there? So you've got your support line in place. After 3 points down, 3 pivot lows or touches to that line, now price comes back again. What are you supposed to do? What's the rule? Right? Yeah, you're supposed to buy. You're enter, right? That's where you buy. It's like every trading book ever written. What's the problem though? How come most of the time that doesn't work? It's because nobody's focused on what's real. Every time price comes down to create those 3 points to confirm on a chart, what's happening to the actual demand? Is it increasing or decreasing? What's happening to the actual demand? Is it going up or down? Exactly, Michael. There's no more unfilled orders. It goes, that's why. So what that actually teaches you is don't take the high probability trade. Wait till the odds are extremely low and then buy. And I don't want to just sit here and beat up technical analysis, but my responsibility is to you. So I want to make sure that, and I'm just trying to focus on sharing with you how markets really work, how money is really made and lost in markets, right? How and why, exactly how and why market prices move, for example. Let's look at the dollar. So, the dollar's just sitting here. The dollar on the weekly chart, and we've been looking at this chart for a long time. It's kind of wedged in between this area where we have lots here in the 99 area is where most of that supply is, and then we still have some demand below. Okay, So until those orders are gone, price is going to stay in this range. Once they're gone, you'll move out to this level and that level, right? So just need to be aware of that. Some more actionable levels that we want to pay attention to. Here we're looking at kind of an X-ray screenshot of the dollar through the eyes of the 180-minute chart. Now there's nothing significant about this time frame or any time frame. It's just a time frame that happens to show us, clearly where, demand and supply are on the chart. Okay. All right. So watch that, and then the supply zone above around 97.40. But this is where the dollar is likely to say. Now, if the dollar does come down to here, that's where we'd want to look for the euro and other markets into supply for potential shorting opportunities, or even the stock market. Okay. We'll go from that time frame to maybe down to the 60-minute chart. This is a level that went over with the group this morning. We almost got down there yesterday. It's kind of the same area or similar area. So let's move on from there. Why don't we go to the euro next? And we'll do a combination of looking at the futures markets and then looking at the spot. So again, if you look at the euro on the weekly, it's pretty much the opposite of the dollar, only price barely, notice how price barely went into this demand zone and took off. That's a very big deal. So that tells us that banks around the world are really looking to buy this market right down here. Lots of demand, lots of competition to buy. That's why price is having a hard time even trading here. That's because supply and demand is so out of balance. From there, let's go to, here's again, let's look at a little bit smaller time frame. So again, this is a position that we went over in the morning sessions I deliver. Price just finally got up to the supply zone and started to fall, and now it's just kind of sitting here. And if some of you are in this position, just make sure your stop and target are in place and that you're okay with it. All right. And again, notice how price just touched the level here and fell. So the first piece of information that tells us supply exceeds demand here is the level itself and all the sort of odds enhancers that go with it. Next, price came back and touched the level and collapsed. That was kind of secondary confirmation that there's a ton of supply up here. Therefore, we were okay taking another short position into this level. Make sense? Now we would only, the supply zone is pretty clear, and supply equates to unfilled sell orders, meaning we expect that there's a big supply-demand imbalance up there. But don't forget the second part of this. What about the profit zone? In other words, where is demand below? Well, if you look here, I can kind of draw this in for you. What does this picture represent? Does this picture represent filled orders or unfilled orders? Yeah, filled orders, right? So you have unfilled orders right here. Most of the, a lack of significant unfilled buy orders here. Another way to say that is filled orders. Okay. Unfilled orders cause prices to turn. Filled orders facilitate price movement. You need to get to a point, and some of you maybe are there already, and some of you will, where when you look at any chart, all you're seeing is one of two things. Because everything on a chart represents one of two things, filled orders or unfilled orders, if you know what to look for. And that's when you'll know that you really have this down. And that's when your confidence will be really strong. That's when you'll be very consistent, is when you can look at a chart and everything on the chart represents one of two things, and you can make that distinction, filled orders or unfilled orders. Okay? Yes, pivots are not unfilled orders in and of themselves. Okay, pivots fill orders, right? Just like we were saying that, look, here's a great example. According to the conventional, textbooks, right, and the internet, all the thoughts around support and resistance. Take a look. Here's one pivot high. Here's another one. And now maybe if we get a third, according to the support and resistance rules, now we're supposed to draw a line across, and then the next time price comes back to that, sell short. Can you kind of see how ridiculous that is, or how that just doesn't make sense? Right? Every time price comes back to this area, right? Supply is decreasing, not increasing. Anyway, as an astute and profitable trader, do we want everybody to stop using conventional technical analysis? Well, it's probably not a nice thing to say, but I think you get the point, right? Look, in any market, there's people that know what they're doing and people that don't. And I'm not saying take advantage of people who don't, but unfortunately, how the world works is, people who make money typically get, in the markets, typically get paid from people who don't, right? I know. I don't like it either. I didn't set it up like this, so. Anyway, don't be the novice trader, be the professional. And just like if you're playing poker and sitting down at a table, if you don't know who the novice poker player is at the table pretty quick, who is that novice poker player? It's the same thing here. If you can't clearly spot a novice trader on a chart, that novice trader is probably you. So just be careful. And I say that with all the love in the world. Okay. Let's move on. Let's take a look at, there's some levels in the yen, but they're not that close. Why don't I skip down to, let's go to the Swiss. And this is a very big time frame, but take a look at what's sitting right above these highs. We've kind of touched this level once, but so we've got a relatively fresh supply zone above if the Swiss rallies, and a nice profit zone below. Let's go down to the 4-hour chart from here, and you'll see here's the opposing or an opposing demand zone to that in the 98, call it 85, 86 area. And then I think a more actionable level, you'll see right here. No, never mind. Not sure why that level's there. Okay. Someone wanted oil. Let's go to oil. So oil has been, so oil's traded up to our supply zone. I think we probably went over this last time, and it's just slowly, it's kind of in the middle and slowly turning. Obviously, it's struggling here because there's some supply up here. And if we go down a time frame or two, let's go right down here. Okay. So here's that larger time frame supply zone that we're kind of in right now. But just note that there's a higher probability level sitting just up here, 58.80 in oil. Watch that. Okay. Now, why do I say higher probability? Notice less trading here in this supply zone. Lots of trading here. Less actual transactions or trades at a level means a bigger supply-demand imbalance at the level. The more trading activity you have at a level, the less out of balance supply and demand is at the level. And remember, the bigger the imbalance, the higher the probability price is going to turn. Make sense? Okay. And then, there was a little, this morning I gave the group a little, here's a demand zone. Yeah, there's a couple little levels, and you'll see these better on, 2-minute charts. If I go down to 2-minute charts, I can do that here. There they are. This is just for some daily income trading. Remember, we want to focus on an equal, everything we're doing here with the strategy The supply-demand strategy I developed many years ago on the trading floor is equally applicable for daily and weekly income, and then building and protecting that longer-term wealth, and of course, across any and all markets. Okay. Let me go on and share another couple markets with you here. One of them was, let's look at the euro yen real quick. Now there's a nice opportunity on the daily, but it's not close to meeting entry. So I wanted to show you, we do have some supply that you'll see on the 4-hour, 127.28. Then to find demand, you kind of have to go down to, oh no, not a demand zone. Here's a closer level, I think. Yeah, there's a nice little level sitting just above current price. So watch for that. And that's the euro yen if you trade that market. And then I'm just looking back at my notes here. There's a lot of them. Lots of opportunities. So yeah, so I know we're a little past our little time window here, but hopefully that was helpful. I know we went over, kind of want to make today's session part educational, part let's go over some markets and opportunities, and we'll review those opportunities if they meet entry next time. And hopefully that was helpful. It was great to be with you again. Don't forget, if you have a question, just scroll up. My email address is in there. Just shoot me an email with any questions you have, sam.seiden@tradingacademy.com. Have a great day, everyone, and we'll see you next time. Yeah, we can work on profits too, Jared. Just shoot me an email, but we'll get to that next time for sure. All right, have a great day, everyone. We'll see you next time.